So yeah, okay. So we'll be looking at trade management. So the first thing you guys need to do is to identify trends. Okay, you need to be comfortable kujua kama market iko in an uptrend, kama market iko in an uptrend na kama market iko in a downtrend. Okay, ama market ni consolidated ama iko in a sideways momentum. Okay, then the second thing, you need to identify different candlesticks in a market. Okay, so ukiona candlestick imeform in a certain place, can you identify kama it's going to be effective ama ni a candlestick just like any other ama ni indecision kwa market. Okay, then you need to be at least comfortable na trend reversal na trend continuation formations. Okay, hizo zitakam pole pole, but the more you practice, the more unatry kuzi-identify kwa markets. Go as back as possible, try and identify them. Okay, then for now, najua most of you mnaweza kosa kuwa able to hold trades for more than a day ama for more than 4 hours. So hapo hivi you need to employ a system. You guys need to find a way, ama ukiingia trade, you need to trust yourself. You need to be certain of what you're doing. Okay, so try and hold a trade as much as inaweza enda alafu irudi ikuwa negative. Jifunze kuhold a trade for longer. Okay, then with time try and be at least watch hizo trades so that you can know the time yenye market inaka itaturn ama time market inaka it won't be, it's not going to really pay. Okay, then by now you guys should be at least gonna make some sort of profits. In the end of the day, at least you're making profits ama in the end of the week. Okay, focus on mostly at daily profits and stop loss. Give yourself a week. What's within a week? What happens? Are you making any profits within that week? Are you making losses within that specific week? Okay, so you guys need to be, you need to start at least getting a, you need to accounting for your trades. Okay, it's about time uanze sasa kuandika down, this week nime make this number of pips ama this profit, last week I lost this. No. So in the end of the month, at least be sure ama have a certain number, have a specific number, yeah, what happened ama what you did. Advantage ya keeping track of all this ni, okay, tuko na 10 minutes. Advantage ya keeping track of this, if at all utaenda kutafuta job in a trading floor ama anything, they'll ask for easy back, zinaitwaje, they'll ask for records, they'll ask to see your trades for at least a specific number of time ama a specific period. So you need to at least have easy kizungu imepotea, but tunahitaji kuwa na all this written down ama all this specifically drafted. That way kama kuna maswali you able to answer ama there's a clear picture of where you're coming from. Yeah. So volume in trading. So basically volume, what do you say? Volume is the risk percentage. Okay, so let's say you have an account with a balance of 48,565. Okay, so there's an amount you're supposed to risk per trade. Okay, what you say, between 2 to 5%. I'll tell you to risk at least 2% at most. Okay, so the reason to risk at least 2% of this amount ni that way, in case kama market itakuja iende against us, you're not going to make any losses. You're not going to make so much of a loss that it affect this account in the end of the day. Okay, so you can imagine if we lose $1,000 to na 47,500. Okay, so that will be our 100%. So you'll need to recover that $1,000 before you start at accounting any profits that you want to make. Okay, so that's why you need to be very careful. You need to have a percentage. At a C, you need to have, don't risk more than 2%. Okay, so how do you calculate easy 2%? How do you put in, how do you key in your volumes? So the first thing is ukienda kwa new order ama ukianza kufungua new trade, okay? So new order, this is where you key in your volume, okay? So the easier way inakuanga for an account with $1,000 unatumia volume ya 0.10, okay, for all the currencies. Then for an account with $100 you can see that is 0.01, then ikipanda. But that is just the big picture, ama that is just the easy way to do it. So what you need to understand now, the term volume, ama what you need to understand ikikuja to volumes ni each currency inakuanga volatile, ama the volatility of Euro USD is different from GBP USD, okay? So what we mean ni something we call pip value, okay? So price ikimove 10 pips in Euro USD, there is a certain amount enye inachajiwa for that currency depending on the volatility. Price ikimove a certain number of pips in GBP USD, there is a certain amount you can get paid for that number of pips in a move. The volatility of Euro USD and GBP USD is different, okay? So volatility inapimangwa na the movement per day within a specific number of a period of time, okay? So let's say Euro USD. To get the volatility of Euro USD, there's an easier way, ATR, okay? ATR is an indicator. But what happens ni, wataangalia the volatility. Market, kama leo, market imemove how many pips by the end of the day, okay? By the end of the daily candlestick close. Then in the last 14 days, market imekuwa ikimove what distance, okay? Ama pips ngapi, what is the average of that number of pips. So kama imekuwa ikimove sana, then you expect the volatility of that currency itakuwa juu. But kama imekuwa ikimove kiasi, then the volatility itakuwa kiasi. Na the higher the volatility, the more the market itachajiwa pa pip movement, okay? So kama market iko na very high volatility, una expect the pay ama the losses zitakuwa high, okay? Una expect the pip value itakuwa high, okay? Then kama hope I'm making sense because naongea mob. Kama the volatility is low, una expect the pay itakuwa kiasi na the losses itakuwa kiasi, okay? So unaweza pata a certain currency, the pip value is $1, okay, per pip. Then when the another currency upate ni 0.8 cents, when the another currency upate ni 1.5, okay, you get the logic. So volume ni the risk percentage, okay? So for you to get that amount ama your volatility, for you to get a piece of your volatility, you just don't use the same volume kwa kila trade, okay? Because you're only risking 2% of that trade. Hope that makes sense. So after kuongea all that nonsense, what you need to understand ikikuja tu volume ni at least 2% risk, okay? How do you calculate the volume per trade? So how do you calculate the volume per trade? There's an app inaitwa Stino, okay? Stino itakuambia the specific currency, okay? So let's say tunataka kujua the volume you're going to use for Euro USD, okay? So we're going to key in our balance, okay? Then tuta key in the stop loss. Let's say tunataka kuweka stop loss yetu at 20 pips, okay? So let's say tunataka kuingia buy hapa, tumeagree our stop loss itakuwa hapa, okay? So our target itakuwa somewhere hapa, okay? So tunataka kurisk 20%. That way, in case it trade and against us, it will only take up 2% of our trade for the losses, Okay, so you key in your balance, your number of pips. So stop loss yetu itakuwa how many pips? Around 80 pips. Okay, then itatuambia the volume we can use for such a trade. Okay, it's an app iko kwa simu. I'm going to share it immediately. Okay, so yeah, then so that's how you calculate the volume unaweza tumia, but to key in that volume ni hapa. So for 48,000 ukicalculate, I don't know itakuwa ngapi, but let's say nataka kutumia volume ya 1. Okay, so that's when nitaweka tu. So volumes zina go up to, depending na the broker, I think 100. Okay, but you need to be careful because you don't expect, let's say this trade, let's say tuko na euro USD, tuko na risk ya 70 pips. Okay, na tunataka kutarget whichever amount of pips this is. Okay, so you don't expect tuko na account ya $100. Okay, then utumie volume kubwa ama you use up more than 2% risk, ujipate umetumia volume ya 0.05. Not bad, but just to be realistic, then una expect account yako ikue able kuholdio volume. What happens ni your amount ama your balance itakuwa exhausted, utoke trade hapa ama broker kukatie trade hapa. Okay, a margin call, then immediately after itoke trade ikuja iamue ni kubuy. Okay, so that's why you should be very careful with these small accounts. So we have 1 minute. I'll be back to answer any questions na anything you guys have. And okay, so I'll share the link. I think to join the same link in a few. Let me just share this video clip, then we'll continue from there.